One of my favorite things to do with a data set is to dump it into Excel and get a pivot table out of it. With everything we've talked about so far, we could slice and dice by partner, being customer or vendor, product, account, journal, date. There's really not enough there for making great business decisions. I mean, it may be enough for you and no judgment if it is, but it's not enough for me. And if you're wanting more as well, then this discussion about analytic accounts is going to be one that you're going to want to pay attention to. Now, analytic accounts have changed a bit, especially from version 16 onward. So I apologize if you're in one of those earlier versions. If you are, go ahead and let me know. I'm fine discussing those, but this is going to be 16 forward. Also, analytic accounts are a bit complicated, so I want to break this out into a few videos. So don't be disappointed if I don't cover everything that you want in the first video. Keep watching. I'm sure you'll get where you need to go. So the very first thing that we need to do if we want to use analytic accounting is go into accounting. Then we want to go to configuration, settings, and we can go ahead and start typing analytic up top just to make our lives a little bit easier, a bit more. And we want to add or check the checkbox next to analytic accounting, okay, and go ahead and save. So we got it installed. Let's go ahead and see what that did for us. The first place I want to go is I'm going to go to journal entries, and I want to show you real quick what we're going to be seeing. So we're going to go new, and you'll see now, and this is in a lot of places, sales orders, purchase orders, and any journal entries, you're going to see this analytic distribution column. So this is the first key term that we need to understand, an analytic distribution. So an analytic distribution defines how this debit or credit is going to be split up between our analytic accounts inside of an analytic plan. That probably didn't make a ton of sense, right? So I'm going to go through a real example to show you what this actually means for you. So I've gone ahead and hopped over into a customer invoice. We're going to add a product real quick, and we're going to say, let's do that hamburger, or was it a cheeseburger? Yeah, cheeseburger. So we're going to do that real quick. Obviously, 100% of the sales are going to go to product sales. So $7 is going to go to product sales. We'll see that in journal items. But analytic accounts are different. So what we see is when I go into this analytic distribution, I have projects and departments, which are my analytic plans. So analytic plans are the groupings of analytic accounts, okay? So you could set those up and you could say, as they've said, departments, or you could say branches. It's really any group of items that we want to break things out into. So within each of these plans, if I decide to apply it to this cheeseburger line, I need to allocate 100% of that $7 between the accounts that are underneath this plan. So going with our branches example, if the plan is branches, underneath we would have 50% to branch 1, 20% to branch 2, and 30% to branch 3, just as an example. So for a quick example, we're going to go into departments, and we're going to give administrative 50% of the revenue here. We're going to give commercial and marketing 20%, and then we're going to give research and development 30%. And you can see that these percentages add up to 100%. They have to within a plan. And then you can see here's our subtotal expected here, okay? So this is all good. Go ahead and click X. Don't click the save for right now. And we're going to see what happens here. Let's go ahead and set our customer to Deco Addict. Make sure we're good here. And we're going to go ahead and confirm. So now we have our journal items posted to our accounts, but where did our analytic distribution go? To answer that question, let's go ahead and duplicate our tab. And then while still being in accounting, go to accounting and go to analytic items. So I went ahead and added journal item over here because that's what it's tied to and we want to see that. So you can see my invoice 2024-5 created 3 analytic items, which then add up to the $7 here. So you know where all of this goes, but how do you use this effectively for your company? So here's my recommendation for you. If you're going to be using analytic accounting, you want it to be able to tie out to your published financials. I mean, The real value here, especially when it comes to our profit and loss, is being able to break up that profit and loss between all these different departments to see which one is most profitable. If we can't tie out our analytic items to our P&L, it's going to be very difficult for us to trust that the information that we have is complete. So if you're using analytic accounting, and I think it's a great idea, make sure that you're doing it properly. If this was enough to get you started, that's great, but if you want help setting this up to where it works properly, stay tuned for my next video.